All right. Good evening, everyone. Welcome to Subjects That Matter. This is a forum that we're going to come to you weekly, and we're going to talk about insurance, the importance of having life insurance, and coaches that are able to break down and discuss and tell you exactly what you have in your policy. So today, this evening, we was kind of wanting to talk a little bit about the millennials, our youth of the day. That is very important for you all to be insured, and maybe you have some questions, some concerns about having life insurance, or even do you think that you need life insurance, or even if that's a conversation that you want to have about life insurance. Yes, that is a conversation that you want to have. Protecting you, even if you don't have children. Your youth, you're young. I think this will be a great time for you to sit down with the coach and have them to discuss about having life insurance. I did Google a book about the millennials, Broke Millennial by Aaron Lowry. That seemed to be a pretty good book. It had pretty good reviews on finances and money issues. I think, like Adrienne says, applied knowledge is always the best, because you can have all the knowledge in the world, but if you don't apply it, it really doesn't matter. So I think we're going to go into having multiple streams of income. I think that's very important. And also, if you want to learn how to be a coach in insurance, you most definitely can reach out to us, and we will get you that information, because I tell you, when you know more and you can apply it to your life, and then you can pass it on to other people in your family. I think that's so important, to share the information. So maybe you might not know, and then you get into, being a coach of financial freedom, I would say. And then you can pass that on to your family, and your family can pass that on in the seeds, and it just grows. So I think that's very, very important. So please don't hesitate to come to us if that's something that you want to do as well. So ladies, Miss Janine and Miss Adrienne, let's get to it. So I do have a
Right.
couple of questions that I wanted to ask. And one question that someone reached out to me and said, how much life insurance should I consider for my age?
Well, I think that there's a lot of variables that you want to consider with that, because life insurance is typically is designed to protect the risk of loss of income. So if you've got somebody that is depending on your income, if you were gone and they still need that income, then you would ideally want to have enough to cover the replacement of your income, which is the industry standard suggests about 10 times, 8 to 10 times your annual income. But again, other factors play into that. Do you have any debt that you are leaving behind that would be passed on to someone else? Something that maybe you have a co-signer on, then you want to consider being able to take care of that and covering that as well. In addition to, of course, your final expenses. And if you have children, and you're wanting to leave some, take care of their educational expenses, you want to consider that. So there's a formula, it's a easy formula that you can use to determine how much life insurance you need. It's called the DIME formula, and D stands for debt. Again, any debt that you would pass on, or that would be passed on to someone else if you passed away, that it doesn't die with you. And then adding about 10 to 15,000 for final expenses. So that's the D. The I is for income and replacement of the income. So that would again be about 8 to 10 times your annual salary. And then the M is for mortgage. If you have a mortgage that you're wanting to be paid off in your absence, then you'd want to include the balance of that mortgage. And then the E is for educational expenses for your kids. And so typically, again, industry standard is about 50,000 per child. So that's a quick formula that you can use to kind of figure out what you might need if you're looking to replace income because someone is depending on that income that will be left behind in the event of your passing. Janine, do you have anything to add to that?
Well, I guess I would basically say, because when you think about young people and they, most of the time you talk about insurance and it's associated to whenever I die. And of course, they're not thinking about dying, right? So
Right.
we don't think that it's for us, but just as sure as we have breath in our bodies, we will one day all pass away. The one thing is that we know when we're born, no one knows when they're going to pass, and young people do pass away early or unexpectedly. And so just knowing that you have no idea when that comes, and you think about your family, because life insurance is designed to protect any kind of financial obligation. So one of the big things, just to touch on what Adrian said, is when you're young and maybe you don't have children or you don't have a spouse yet, but you have debt if you went to college. If you haven't paid off that student loan, that doesn't die with you. It rolls to your parents, just as sure as if you put them on as far as who to contact in a case of an emergency. But another thing is also, if you were to pass too soon, that is another financial obligation left behind to your family if you don't have $10,000 or $15,000 put aside for a early, expiration of your life that you wasn't expecting, because somebody has to pay for that. So just the reality of knowing that none of us know if it'll be early or not if we pass away. Every single breathing body needs to have something in protection that if something happened out of their control or they passed away too soon, that they need to have that in place. And just it's an assessment of how much you need, so you never want to get go around and not have your financial obligations protected. But one thing I do want to also speak is that it's really for young people, because the younger you are, the cheaper it costs. So you really want to get locked into something. If you think you want to have a family, it's best to have it in place. If you think you want to buy a house, it's okay, to have it in place, because the younger you are and the healthier you are. Right. And when you're young, you're super healthy. You can get it at very, very, very cheap, low rates, and it's locked in. So really, when you're young, that's when you are supposed to have an interest of getting something that's as important as life insurance that protects, your income and your financial obligations, especially if you plan to have that in the future.
Right. Right.
Yeah. I think time.
Yeah, I think that's why it's so important to have these conversations on a consistent basis, because some people might not think that, well, since I'm young, well, I don't need it. I'm in good health or whatever. But that's exactly why you should get it, because you're young and because you're healthy. Because I believe some insurance companies, you have to get blood drawn, you have to be a certain weight, your blood pressure has to be right. I know I went through that before. So and then your premium will be higher,
or you can get denied.
That's right. Or you can get denied. So I think it's so important for us to keep on having this conversation for our youth, because yes, you do need to be protected. It's very important for you to be protected. So,
and Adrian, I'm sorry, Stacey, can I touch on that just a little bit?
Yes,
because you made something come into my mind, because I've sat down with people who have had health issues, or they were older, and they were very, very offended that they could not get protection, because they felt, because of their condition that could possibly bring on death shortly, you know, that they thought that that was ridiculous, that they could not get approved for it. And so I really want to talk real quick so people can understand the importance of it. Because anytime insurance is attached to the end of the word, that means a risk, okay? When it's a risk to do something, okay? Think about it. It's no different when you have, you know, a crazy driver record. Some companies not going to give you driver or car insurance because your pattern of your driving has shown that you are likely to have wrecks, and quite frequently. So what that means is that you are a high risk for them, meaning they don't want to just give insurance to someone that they know this incident is going to happen. You know, so because life insurance or any kind of insurance is about something unexpected. So think about this from the perspective of a business, and you have an individual that has been given, and I'm just going to use this example, they have been given an expiration date. The doctor say, okay, you only have so much time to live because you have a serious health condition. And so now all of a sudden they're interested in life insurance, right? So the doctor says you have 6 months. And do you think it makes financial sense on the business side of it? Because it's not personal and it's not emotional. It's a business thing that now you have 6 months. The doctor told you paying $40, $50 for 6 months to receive $100,000 in benefits. That doesn't make financial sense from a business perspective. So when you're dealing with companies like that, they're making you qualify, because if that was the case, would nobody get it until they knew that they were finna pass? So how much money would they end up not having by just paying death benefits from somebody who hadn't even contributed $1,000 over a short period of time? So it's for unexpected. When you have a condition and it's all about final expense, then that's when you need to get, like we discussed before, a burial plan. But life insurance is about, oh, something happened to me unexpectedly, I did not see coming, and I have all these financial responsibilities that I need to be taken care of, you know, because you have to know that they're not giving it out with knowing in a few months I got to pay this person a bunch of thousands of dollars, and they only gave me a couple of bucks, you know. So that's why it's something you have to qualify for. Everybody can't just get it. So when you're young and when you're healthy is when you want to make sure that you're protecting something as important as protecting your financial obligations to your family, whether you have them now or they're coming in the future. You know, you want to make sure that you take care of that and understand that's why it's something you have to qualify for.
Okay. So let's see. My next question is, will my premiums change or increase over time if something happens to my job? So if it's a layoff, or if, you know, they lose their job, you know, what way should they go when that happens? You know, I know that I went through that once before myself, and I mean, I thought about it. I think I dreamed about it every night until I got it back together again, you know, but because I knew the importance of having it. So, and I know things come up, things happen. So what would be your opinion on how you would maneuver through that?
Now that's a good question, and it just kind of varies, okay? Because different companies have different what we call grace periods. Some company is when you miss that very first premium, it stops, and which is called a lapse. And you really don't want your policies to ever lapse. You know, even in the car insurance world, you'll get penalized for getting a lapse. You know, so when you think about something like that, because your health could turn at the drop of a dime, you know, you never want to miss, because when it lapsed, it means that it stopped. And now you got to go through the health qualification and everything all over again. But you most definitely want to check with companies and see what their grace period is, because there may be a selection on why you choose that company or not, which it should be, you know, because some companies give you just that 1 month you miss is done. You know, we help people with that. And we have a 3-month grace period, to where if they miss one after the 3rd month, they still cover. But you really want to really kind of prioritize and think about it. Because, I only think about my personal situation when I first got sick and had to stop working. But I understood the importance of life insurance and how important it was for me. And the last thing I wanted to happen was for something to happen to me, and my kids could not be together, because I have quite a few of them. So paying my life insurance was priority. And the reason why I say that is because when you're younger, it's cheap. But sometimes young people, and not just young people, but I've seen people not pay their life insurance and choose to go to Beyonce concert. Swapping, doing things that were less of a priority with their money, then making sure that was top of the list. So one rule of thought is you always want to pay yourself first, and so paying yourself first goes along with savings, but protecting your income is just like paying yourself first too. But you take care of those priority things that circle around your money, and then the rest comes, because when you're young, you can get something $20-$30, and I'm sure we come, past $20-$30. We spend that on fast food in 2 or 3 days, so just making the correct sacrifices to make sure that they're staying there, because you never want your insurance to lapse. I've seen it way too many times in this industry. Right in that lapse period, things have happened, whether it's health has changed and they didn't qualify just like that within that couple of month period. And I've seen people to expire during that time, and it's nothing you can do about it. Okay, so it's really, really serious, something as important of something unknown happening to you.
Right.
Unknown, you don't know when it could be, and so you have to make sure that you understand why you need it, and make sure you do what you have to do to keep it, because it's very, very important.
Right. So
go ahead.
No.
I was just going to add that one of the other risks that you run with letting a policy lapse is that for some companies, they may recalculate your age. And if you're a different age than you were at the time that you initially got the policy, you may have your premium be higher than what it was when you initially got the policy. So there's a lot of risks associated with letting a policy lapse.
Oh, they do, Adrian.
Yeah, they do.
For a different age, 6 months to the next year.
Yeah.
It recalculates when you open that policy back up to that higher age. So the same coverage you could have just been paying this price, now you're paying $5-6 more because your age changed 6 months.
Yeah.
That's a very good point, Adrian.
Yeah. So basically, it is very important to have life insurance. So life insurance should be in your bills. Okay, it should be a part of your bills. It should be a part of your priorities. It should be top, I want to say, somewhere up in the top. And I think sometimes when you write things down and your expenses the things that you spend money on, and you'll be able to see and understand, okay, I have the money to pay for this life insurance. I keep on saying, but I don't have it, but I do have it. So it's important to sit down and talk to someone that's going to guide you, because if you don't talk to nobody, you won't know. You won't know how much it'll cost. You know what I'm saying? It's like, okay, I think everybody should just go and just have a conversation, about life insurance. I know this is something that is not talked about, it's not on the priority, but it needs to be talked about. And I'm glad that I'm at this point now that I'm talking about it, because I should have been talking about it. It should have been talked about years ago when I was younger. So I just think that we're just going to keep on having this conversation, because it's important, because we don't want to be at a situation where something happens and we don't have it. And then we have to do the GoFundMes, or we have to borrow against it, or the payday loans. I don't know if y'all know about the payday loans, the situation, but honey, the interest rate is crack. They shouldn't even be in business, you know.
Still
But
against the law.
oh my goodness! But I'm just saying,
For most of them.
yes, but I'm just saying, to get yourself in that situation where your back is up against the wall, where
Right.
that's where you have to reach out to. You don't want to have to go to that extreme to do it. And I know sometimes when your back is up against the wall, you do that. You know, you do those things. So just let's sit down, let's talk, let's set a meeting up. We can do a Zoom meeting, we can do a 6 feet meeting, you know, whatever we need to do to get you to know the information, to apply the information so your families and you personally can be insured. Okay?
Right.
I can't say it enough.
I want to say Adrian does a wonderful workshop on
Yes.
budget, because that's one reason why we don't get in everything we need to get in with our money, because we just loosely spend it. But when you can keep up with your budget, you know, what are you spending your money on, making sure you're allocating money to the appropriate things, and then whatever you have left after things have been prioritized, now you got extra money. And you will be surprised to see, especially when you're young, you can still do some of the things you want to do.
Right.
But when you budget and you know off the top that this is where my money is being designated to, then things is a little bit more smoother, because we just overspend when we're not carefully watching it. So Adrian does a very good workshop on budgeting and understanding how important budgeting is, because you can get everything in, especially when you know exactly how much and you prioritize those things correctly. Now you know, okay, this is the amount of money I got to work with. And trust me, when you know how much extra you got to work with, you tread a little bit more lightly, right? But when we don't have no limits, we just out here, like the kids say, we turning up with our money, right? But when you know it's designated to it.
That's right. Hey, we ain't gonna be turning up for the next month.
Not too much long, you know. Not 30 days, maybe 2, but not 30, right?
Right. I say I'm working on my credit, and I'm working to, you know, build my credit score up. And I tell you, it's this perfume that I want. I want this perfume every time I go to a store. Since I've been to the store twice, every time I go to this department store, I smell this perfume. And the tester, I test it, I put it on. That's enough for me, okay? Because my priority is to work on my credit. You know, even though I have the money to purchase this, I'm not going to do it right now until, you know what I'm saying? It's like you want to have everything lined up, you know. You still want to, you know, take care of you. You still want to, you know, give you something, pay yourself something. I get that. But in increments, you know what I'm saying? You know, just got to
I think that you're talking about discipline and delayed gratification and self-sacrifice. And all of those things are important when you have a goal. For you, it's right now getting your credit in order, but also when you're talking about accumulating wealth, that's those things are important to think about. So you may not be able to do it today, but eventually you will be in a position where you can do that. And so we've gotten to a point where we want things right now. We're instant gratification, and we don't like to wait or delay things for another day. But we need to learn that discipline in order to get our financial houses in order, honestly.
That's right.
And that budgeting piece, like Janine talked about, it's so important, because we go spend money at fast food, and if we're doing that 5 days a week, spending let's say $10 a meal now at fast food places, that's $50 a week. The coffee, you know, going to these specialty coffee shops, $5 a pop for a coffee. 5 days a week again, that's $25 there, you know. So money, we have the money, it's just a matter of what are we doing with it. and learning how to, like, I think Janine said, properly allocate that to the right things and making things priority. So when we're talking about life insurance, I was reading an article and it really struck me. The article said that life insurance, even though it's a difficult conversation to talk about, it's a difficult topic to discuss. And some people feel like, oh, well, I don't want to benefit off of somebody's death. But the reality is that life insurance is a love letter. It's the last love letter that you send or you leave for your family. And so when we talk to our families, we make promises to them. So just like in a love letter, you make a promise to love, to protect, and take care of. And so this is your final love letter to your family, fulfilling that promise that no matter what, I'm going to take care of you. I'm going to protect you and make sure you have what you need. And so if you think about or reframe how you think about insurance, life insurance in particular, then you can make it a priority in your budget.
And Adrian, I want to tap on that because I have heard people say that. And I don't know the correct word I want to use on how it makes me feel to hear a person say that, because it's not even a benefit off of someone's death. What it is a replacement of what they would have contributed to you. If they were alive and you would have took those contributions from them over a period of time, it's just their way of still contributing what they would have contributed to your livelihood if they were still here. So that's what life insurance is, because their contribution, if they're no longer here, it will disturb your livelihood. That was a part of, keeping their livelihood. So it's not about, benefiting off of somebody's death. That type of thinking is what stunts generational wealth in our families, because what happens is when we are using that money for something to contribute to what how we're living every day, I've seen average people lose everything they have because that was their mentality, and now the person is gone. They're like, oh, it wasn't nothing extra. That was what they were contributing to your livelihood. You don't see it because they're here and you're getting it. But when they're gone and you're no longer getting it, we lose everything that we worked so hard for with our family. So you look at it as not a benefit, but this is just what they would have done. But something unexpectedly happened and they loved me enough to still leave that behind, so we're not displaced from the lifestyle that we have.
Right, exactly. That's a great point.
I like that. I like those points. Yeah, you have to, it's a mindset. It's definitely a mindset, and you have to change the way you think, because you've been thinking this way all these many years, or not even considering the thought.
Right.
But when you sit down and when you talk to someone telling you about your finances, then you'll be able to see it, and understand it. So yeah, that's good. I like that love letter. I like that.
Yeah, I thought so too. When I read that article, I was like, I like that. That hits it on the nail on the head.
Really do.
The fulfillment of a promise.
It's really deep because it is most definitely a love letter. And think about it, it's a letter of appreciation. If I pass away too soon and my mother has to take my children,
yeah.
That's a letter of appreciation, because first of all, it's a love letter to my children, because I want my children to have the same lifestyle that I would have provided for them.
Right.
But I sure want to show my mom appreciation for taking over my responsibility because I'm no longer here. I don't want her struggling raising my children.
Right.
I want to give her what she needs to take care of them and love on them, and not regret that they're even her grandchildren.
Yeah,
I've seen that people are frustrated because they had to take care of their grandchildren. Not that they don't love them, but the money was not there. So they're like, oh man, this is an added expense into a family who was already basically, for 78% people live paycheck to paycheck. And now I have to raise another baby that it costs $250,000 to raise her at 18 because the money was not left behind to do that. So it's a love letter and a letter of appreciation when it comes to children. Nobody does not have a child and not have life insurance. And that's
great.
Yeah.
Great point, Janine.
We buy them a bike and we say we love them, we buy them some Jordans. but your love is through taking care of what I don't see.
Mm-hmm.
Unexpectedly, that could happen. And
Yeah.
I want them to have the same thing. If I want to gift them with a bike, I want my mama, if she taking my kids, to gift my kids with a bike when they have a, not to say, okay, I'll cook you a hamburger for your birthday because this is all I can do. And I've
Right.
seen that, So
Mm-hmm.
you have to think of it in that way, even though it's not something we want to think about. But guess what? It's a reality.
It's a reality.
Yeah.
It's happening.
So that's
Yeah.
how I thought about it. I paid it first. I'm
Yeah.
like, I would not dare leave this earth unexpectedly. It's out of my control. And my babies, they couldn't even be together. That's all I could say. Who gonna take
Mm-hmm.
Bray? Who gonna take
Mm-hmm.
Kobe? Who gonna take what? So I'm not in this world, and my kids gotta be divided up too.
Yeah.
They can't even have each other. Oh no.
Mm-mm.
So it was
Yeah.
days I was in my house with lights and a Simon Said, telling my kids we having a camp out. And that Simon Said, it was so beautiful in the dark. I didn't realize it. And the kids enjoyed it, because I'm going to pay this life insurance because I can't even wrap my mind around that.
Yeah.
I have a lot of children,
Yes.
so that's how I saw that comes first.
Mm-hmm.
Mhm.
Yes. Oh, good information. Oh,
Yeah, it is.
it's good information, Miss Janine. Okay, so let me see. I don't know. I think that is it. I think we've hit some good points on tonight. We've shared some good information about having life insurance, the age, considering if something happens to us, who's going to take care of us, the love letters. I mean, we covered a lot tonight on that the importance of having life insurance. So if there's anything else that you ladies could say before we end on this evening.
I have one thing I would like to say before we close, and this is just kind of in light of what's currently going on in the world right now, because I mean, this is something that we really can't take lightly. Unexpected things happen to good people, to all kind of people. Okay, and if we open our eyes, we see it. Okay, and it's not right, but it happens. And so when that unexpected things can happen, and the likelihood that is pretty high that it could happen, you have to protect yourself, just to, shine a light a little bit on Mr. George Floyd. I'm sure he wasn't expecting those events that day, but it took his life. You think about Ahmed, what his name was, that was jogging. I guarantee you he didn't expect that when he left his house to go jogging.
Right.
And we can go on and on of unexpected events that have been occurring, especially in our communities, and with our culture. Whether it was right or wrong, these are unexpected events that I guarantee you not one of these individuals woke up that morning feeling, oh, this is about to happen to me. Think about it. And so knowing these things, and even if we got outside of that, I know of quite a few people that on their way to work and a big wheeler hit them. They wasn't expecting that. I've just seen all kind of things that happen to innocent people that they were not expecting. That's a thing called life. None of us know, like I said before, when our last day is. So we really have to take this stuff way seriously than what we do. Because to me, it's no reason why no one should protect their income because of that. You have no clue. And especially when we see things happening around us, even if we look at COVID, before COVID got here, it's the end of 2019, all these thousands of people wouldn't have never thought they would have caught that virus and wouldn't be here today in just like that. And people we know, None of them knew that this was coming and it was going to affect them. So guys, it's in broad light, okay? And we cannot ignore it, and none of us can say that we're exempt from it. Just as sure as we breathe air, we are not exempt from death. It's just none of us know when it is. So let's stop ignoring the facts, because it costs us financially, and it costs us wealth in a generational way, you know. And when it happened unexpectedly, you're not prepared. We're putting those that we love in a financial bind, you know. So I just wanted to kind of tap on that so that we can understand the reality of things. Okay, this is no guesswork. This ain't no hypothetical type of idea we coming up with. You can turn on the TV and see things happening, right? So we have to most definitely make sure that we understand this. And then another thing, you have to understand what goes on in your policies. Okay, I have replaced, and what I mean replaced is giving people better coverage because things have been in their policy that they were not aware of. Okay, during the time when it was the riot at Ferguson, okay, up here, you know, near with St. Louis, kind of up in that area, I helped a young lady with her policy that had partaken in that particular riot. And when she mentioned that to me as I was going through her policy, and I said, "Oh, did you know it was a riot clause in here?" And she said, "What does that mean?" I said, "It says right here, if you happen to pass away in a riot, your death claim would not be paid."
Wow.
She said, "What?" I said, "Your death claim would not be paid. It states right here." Because they call that, the insurance company did, not me. The insurance company called that risky behavior. Okay, high risk behavior, because you went into an environment that could have gotten hostile. Okay, a lot of people don't know if a bunch of people passed in a group of people, like war and terrorist causes like 9/11. And 9/11 happened, and can you imagine all those people in New York did not anticipate that event that day.
Right.
But to know that you had coverage in place that says if you died this way, we're not going to pay you because we don't have to pay you. Only 3 life insurance companies pay death claims in 9/11. So understanding your policy is very, very, very important, because you could be paying for something that's not going to deliver like you think you're going to deliver. None of us know how we're going to die, you know, normally. So you have to make sure that you understand those things, but you most definitely have to get things in place, and you have to really seek someone that's going to sit down and help you see and find what it is that you really, really want. It's just no different than shopping for a car. You're going to find out how many miles it get to the gas. You know, those are things that we really want to check out before we pay a car note, right? But you really want to think about that when you're looking into getting protection. Something that's important is that life insurance is important. It's top of the list. Okay, so you really want to know exactly what you have, but you most definitely got to make sure you protect the guys. It's things happening that's out of your control.
All right.
I think one last thing that I would add to what Janine said, because she made some great points, but just kind of a question, I guess, that I would leave for the people, whoever's watching this. We put insurance on our houses. We put insurance on our cars. Put insurance on cell phones and electrical devices. In your life and your ability to replace your income for your family, isn't that much more important than a cell phone or a car or even a house for that matter? It should be much more important and much more of a priority than any of those things are. So we think about it from that perspective as well. It's like, what are you thinking if you are spending money and making those other things a priority over protecting your family by being able to replace that income? So this is just a question that I think I'd like to leave everybody with.
Okay.
And I'd like to add a question to that, Adrian, just to piggyback off of you, and I'm done. Because like you said, if you're gonna pay your car insurance, you know, and the crazy part is that they make us do that. They make us pay it, And especially, sometimes we could slide on the radar when we paid that car note off. But if you haven't paid that car note off, they are calling you if you missed that insurance, because you have a financial obligation to that bank. And that bank,
Right.
is very important that you owe them money. So they're going to make sure you pay them, right? So don't you think that it's important if they make sure you take care of them, that you make sure you take care of your family with your income? That's something should nobody have to make sure
Exactly.
that you do. Right? Nobody should have to make sure that you do that. So think about that. They make sure you cover that, or they make sure you have that insurance when you go into a mortgage, because if something happened to you, the bank still want that outstanding loan.
Right. They sure will.
So you make sure that you protect your income for your family. Should nobody have to make you do that?
Yes, honey.
Yeah.
Yes.
Great point.
Yes, that's a beautiful, beautiful ending. Yes,
Yeah.
honey. Make sure. I love that. Love that. So you know what? We're gonna leave it right there. We're gonna let you meditate on it right there. Make sure, just think about it. Apply the knowledge, think about it. And listen, think about your families, their well-being after you're gone. Just think about it. Ladies, thank you so much. I am so thankful. I love y'all. I promise you I do. I thank y'all. I appreciate y'all time, y'all energy, y'all knowledge. And I believe we make a good team, and we're going to continue to come and bring knowledge and power and get you to apply the knowledge that we bring to you. And I truly appreciate you, ladies, and I am in good company, and I am so thankful that we are sharing the knowledge, not because we have to, but because we want to, and because we know the importance of doing it. This is important too. I know if you don't know by now, you should know, all three of us, there's an importance, there's an urgency that we need to protect ourselves and protect our families. So I urge you to meditate on this, watch this, share this with your family, your loved ones, and listen, you know where we are, you know where we'll be. You can inbox us, you can get in touch with us, and we're going to keep on having this conversation because this subject matters.
It matters.
All right, y'all. Thank y'all. Have a blessed evening. Love you. Peace. And
right. Thank you, Stacy,
for having us, Stacy.
All right. Bye-bye.
Bye-bye.